today we have our wealth strategy. And the wealth strategy I'm going to talk about is a dividend tactic, and it's about energy. Okay, so it's a type of investment in the energy sector that brings dividends on a regular basis. So I have something specific in mind for you, and it's in the oil and gas industry. So we all have these feelings about, the environment and oil and gas, and they're not ecological and so on and so forth. That is quite right. But this is how our society lives. I mean, although there are a number of alternative energy projects in place, they won't be coming around or be fully functional and mainstream before 20, 30, 40, 50 years, maybe more. Okay. So in the meantime, our society is based on fossil fuels. So oil and gas are really important for that. So if we're going to have that, might as well participate in that play and make sure that it is done correctly. All right. So if you want to invest in oil and gas, essentially you have two possibilities. You can do it through a public way, where you invest in listed companies. You go to the stock market and you buy shares in companies such as Shell, British Petroleum, Exxon, and so on and so forth. Okay, so that's, let's say, the public way. And then you have the private way, which is much harder. The barriers to entry are very high. It is a very, very lucrative segment to play with, and therefore the barriers to entry are difficult, are high. And if you don't know the right people, you will not get in. Okay, so what we have put in place and what I'm preparing and soon I will share with you is some more specifics about this. So in the meantime, let's just say that there are exploration wells and development wells. What's the difference between these two type of wells? Well, exploration wells is like what they do, the wildcat. So it's just like, I believe there is oil over there, so I'm going to start drilling until I find some oil. Okay, that's the exploration wells. Very, very high risk. However, when they strike oil, it's absolutely extraordinary, but very high risk. Then you have the development wells, which is to drill a well in an area that that there is already oil over there. So around you there is oil, so very likely where you are there will be oil as well. So they just drill there. Okay. The United States have started doing this, and they have increased their input in this market, and they have become the #1 in the world. And we are in touch with an operator that has been operating in America since 2014. And they are very successful. It's one of the largest private contractors in America, drilling for oil, and the returns can be really, really rewarding. We're looking at somewhere around 50% per year. It takes about 18 months to 2 years to get the first dividends, but after that you start getting approximately 50% of your investment every year, and you are paid on a quarterly basis. And this is for as long as the well keeps pumping oil. So that can be for 10, 15, 20, 30, 40 years. Okay. So this is the potential. So this is the tactic I wanted to share with you. It's a very powerful one. We'll get into some details in the next few weeks or in the next couple of months. So and if you have, and I can sense many of you would like or would like to be looking at different investing opportunities. So this could be a good opportunity for you if you're interested. All right, good. Right, that's what I wanted to share with you today.